Good morning. Today is Friday, August 23rd, 2024. And I don't really know what the news reports are today. So let's go ahead and jump into that. Check out the news. What's going on, Optimus? Glad to have you guys back here. Today we had building permits. I like the old layout, honestly, dude, of TradingView's thing, because this like static bar here takes up half the screen. It's useful, but I just wish I could like hide this whole section. In any case, so we've got building permits final. That came out at 4:30, so that's already built in. We got Fed Chair Powell speech to a J Powell speech, 7 o'clock. New home sales, as well as new home sales month over month. We got that whole Jackson Hole thing going on at 5 o'clock, but I think the markets are going to be watching for J Powell at 7, so that's coming up in just 15 minutes. Let's see if we can find something for that. What's up, Kevin? Good morning. Glad to see you. We got J Powell doing that speech live today. You know, the Federal Reserve has a YouTube channel. I wonder if we can stream from here. All right. Well, with that J Powell speech, that's going to make things a little bit wonky donkey on the day. So pull up some charts here and take a look, see what we got going on. That J Powell speech is coming in 15 minutes. I don't really know if I actually want to trade leading up to that. Let's see what the movement's like. When I first opened the chart, we were pulling back down here to 56.23 and right up here to 56.26. So it looks like it's just kind of range trading at the moment, at least for that section. This is the open here. But you got to sell off the open and rip back up after that. Let me take a look at this on the 1 minute. So we may get one of those situations where J Powell comes on, and then the market just rips and goes insane like he's a rock star. So seeing some resistance along these lines at 56.27, and we may see some crazy movement here in about 15 minutes. Pull up my top step. Oop. Nope, not that. All right, so we're up about 260 in this count today. Well, not today, but just in the account as a whole. This actually did kind of break out a little bit. It's obviously moving super chops. One minute chart actually looks pretty good. Honestly, that was a pretty cool little breakout there that I missed. This actually was a decent move. This whole turnaround here, kind of. I mean, I guess it was a TTM move, but a little miffed I didn't take it. But also, I saw the J Powell speech. And I was like, oh man, this. Early markets are up about 0.6% in the ES. I don't even want to think what the Nasdaq's going to be like today. It's gonna be crazy. About 10 minutes. The J Hauser. We almost got this crossover. I'm kind of bullish on his remarks, honestly. I'm debating whether or not to pile into some contracts before the time. I think my only concern is if it rips way down and then rips back up, which I've seen it do. It's a pullback off that 5630 area. Back down the VWAP 25, 5625. Enjoying the bid here.
Order filled.
Sticking with 3 contracts. Good for a little scalp. We need to get out 27. There's been kind of the resistance zone here. What the heck is this? Oh, that open. Oh, pulling back some. A little more pullback than I want to see. Actually, a lot more pullback than I want to see. It's kind of hoping for a pop there. Oh, wow. Yeah, that's crazy. Dude, come on. My computer is moving slow, dude. Pretty far down in this trade. Man, it's not looking great. T10's at negative 2.7 on the side.
Order filled.
Bought one additional contract to reduce my entry. Just because it kind of looks like we're getting a pullback up. Kind of just wish I waited for the full pullback because it kind of looked like it was going to pull back anyway. So I'm just looking for a science switch on this guy now. Their entry's at 25, 25.50 at this point. I'm still trying to get it at 27, so going for like 6 ticks. Oh, dude, it tapped our sell order. Come on, get that fill.
Order filled.
There we go. All right, so that was like 6 ticks at 5 contracts or 4 contracts. So up 301.30 on the day. To be completely clear, the only reason why I stuck inside of that trade was because we were really close to this 5200 cross here, And then because of the range that's happened on the day, so this is exactly why. I just want to explain this, why I didn't cut that even though I was down. This was past my risk, but the reason why I kept on this was because this support line right here. So what I was banking on was that we would find support along this 23 right here and bounce off that. And I'm grateful that I did, because this is why technical analysis is so important, because it's like, okay, well, yeah, okay, I didn't take the time to wait for the full pullback, but because we had support back here, I figured that there would be a pretty good case for support right here. Just like I think that there's going to be a pretty good case for resistance right here where we're at. And so that's why I stuck onto it. And that's also why I bought the additional contract to lower my cost basis. I wouldn't always do this, and I wouldn't always recommend this. And obviously I don't recommend anything, that's not financial advice. Do your own due diligence and conduct your own trading and build your own strategy. But this is why technical analysis matters. So I was looking at that as support, and so hence why I bought down here and decided to ride it up, which, like I said, lowered my cost basis. It also at the same time allowed for that trade to be a little bit more profitable. And that's also why I didn't get too worried on that pullback, even though I was down 600 to make 300. But I just wanted to explain that reasoning, so you guys understand that, hey, I wasn't really trying to make a super risky trade or hold on to it through crazy pullbacks and anything like that. Just wanted you guys to understand that was the thought process behind it. Greetings and salutations, everyone. We got a decent sized house here. If you guys wouldn't take a moment to like and subscribe, I really appreciate that. But that was the thought process in holding this through that pullback and buying on the dip. Normally I would just cut, but because we had this additional support back here, that's why I did. We're coming up on 7 o'clock. We're about 3 minutes from JPAL. If anyone knows a good place to stream the JPAL speech, I'd appreciate it. Drop it in the chat. Might get a bounce off that VWAP. I'm not going to take any moves right now. I think that there's a pretty strong probability that we'll rip straight up once JPAL takes the stage. I've seen it so frequently where we'll rip straight up, and then we'll rip straight back down, and then rip straight up again, and then straight back down again. And then from there, it kind of finds a footing, and we see some, more consistent movement, even if they're bigger moves from there. It looks like we're going to push through that high there. So I'm tempted right now to just take some contracts and pile into a trade at 7 o'clock. Just a little leery that it might rip straight down. One minute away. Ooh. There's a nice little pop there. I actually feel pretty confident that this is going to rip up, so I'm going to try to get in a limit buy.
Order filled.
And I'm going to put this up here. We go for a break through the highs. It's kind of a bit of a yellow trade, if you will. Going for 700.
Order filled.
Yeah, we made that. So up 1042 on the day. It counts up at 1300 or so. That was even bigger rip than. I mean, I was expecting a pretty large freaking rip. I'm glad that I went with my gut and piled into the trade. I could have gone for obviously significantly more, but there is a consistency target that I do have to hit. So if my day ends up being too big, then I'm just gonna have to keep on trading and make even bigger days. So it's something to consider at the moment. So right now, this is my biggest day of this combine at 1042 in profit. Well, that would have been sick on a funded account, man. So I was right about the rip. I've seen it happen just so many times. Once J-Pow takes the stage, it's like, here's the bulls, just run it in. Yeah, way more rip, even like another $15 above my exit. It's crazy. So we took 750 off on that. This is an example of like a trade that actually is pretty repeatable. Now I didn't take this trade completely based off charting, although the charting was trending bullish anyway. But I've taken several of these trades over the years, and they almost inevitably just work out, or invariably, I should say, just work out really easily. But man, what a move. That's crazy move. Huge. So up about 1042 on the day. Obviously, to protect profits, I probably want to cap it there. And also too, like I said, I felt like I could have gone for a lot more profit on that. It was a 20 tick profit, but you know, I mean, this ended up ripping up another $20 off of that. And so I could have gone for more. I do have a consistency target to hit. So if I have any day that's bigger than like 50% bigger than the rest of my days, and currently I think that is my biggest day is like 469 or something like that in this trading combine. Matter of fact, I think I can pull that up here. Give me a second. All right, here we go. This is just trading on this week. So our best day, was 469. Our worst day was 604. This is the first day I traded this. It was just kind of learning this account. So here's what the day looks like. So here's the start, day 0, 50K. Day 1, I guess, down 604. Minimum balance of 49K. And then day 2, made 398.10. That was the day I was up 750. and then gave back some profits. And then day 3, this one, so I was up 540, went red, then worked my way back. I don't really understand why the minimum balance goes down. Anywho, I believe that becomes static at a certain point. So that's where we're at right now with this. So this was definitely my best day. Best day percent of total profit. So my best day, I believe, can't be more than 50%. So right now it's like 178%. So I didn't want to do too much and then have nowhere to go from there. But man, definitely there was, a lot more left on that table. All right, we may actually get a decent sized rip down. Just something to be aware of. See this on the 1 minute chart. Yeah, there's that rip down I was mentioning. It's a little bit easier to see on the 1. So we could get a bounce off the 9. We could pull all the way back to VWAP. And there we are, pulling all the way back to 38. Now back to 35 area. What's up, Tiny? Happy Friday. See if there's a place I can actually show the Jay Powell speech. Yeah, there it is. So with Jay Powell, $20.
Long after we are all gone. The arrival of the COVID-19 pandemic led quickly to shutdowns in economies around the world. It was a time of radical uncertainty and severe downside risks. As so often,
I'm gonna cut the music real fast.
Americans adapted and innovated. Governments responded with extraordinary force, especially in the United States. Congress unanimously passed the CARES Act. At the Fed, we used our powers to an unprecedented extent to stabilize the financial system and help stave off an economic depression. After a historically deep but brief recession, in mid-2020, the economy began to grow again.
So let's see here. Let's see if I can get the chart up with this.
And as the economy reopened, we faced the risk of replaying the painfully slow recovery that followed the global financial crisis. Congress delivered substantial additional fiscal support in late 2020 and again in early 2021. Spending recovered strongly in the first half of 2021, and the ongoing pandemic shaped the pattern of the recovery. Lingering concerns
one or the
COVID
other
weighed on spending on in-person services, but pent-up demand, stimulative policies, pandemic changes in work and leisure practices, and the additional savings associated with constrained services spending all contribute.
Let's see if there's a way that we can make this work better.
In consumer spending on goods. The pandemic also wreaked havoc on supply conditions. 8 million people left the workforce at its onset, and the size of the labor force was still 4 million below its pre-pandemic level in early 2021. The labor force would not return to its pre-pandemic trend until mid-2023. Supply chains were snarled by a combination of lost workers.
So that pulled back all the way to 35, and then ripped all the way back to 47. So pretty massive pullbacks and massive risks. Stay safe out there. Volatility is going to be pretty intense here.
Enter inflation. After running below target through 2020, inflation spiked in March and April 2021. The initial burst of inflation was concentrated rather than broad-based, with extremely large price increases for goods in short supply.
So the 1 minute
motor vehicles. My colleagues and I judged at the outset that these pandemic-related factors would not be persistent, and thus that the sudden
May
rise
come
in
up here and
inflation
touch the
was
high.
likely to pass through
Yeah.
fairly quickly without the need for a monetary policy response. In short, that the inflation would be transitory. Standard thinking has long been that as long as inflation expectations remain well anchored, it can be appropriate for central banks to look through a temporary rise in inflation. The good ship transitory was a crowded one, with most mainstream analysts and advanced economy central bankers on board. I think I see some former shipmates out there today. The common expectation was that supply conditions would improve reasonably quickly, that the rapid recovery in demand would run its course.
In the
and
test
that
of the
demand would
highs here,
rotate back from goods to services, bringing inflation down. For a time, the data were consistent with the transitory hypothesis. Monthly readings for core inflation declined every month from April through September 2021.
What a
although
rip
progress
back up.
came slower than expected. The case began to weaken around mid-year, as was reflected in our communications against the transitory hypothesis. Inflation rose and broadened out from goods to services, and it became clear that high inflation was not transitory and that it would require a strong response if inflation expectations were to remain well anchored. We recognized that and pivoted beginning in November. Financial conditions began to tighten, and after phasing out our asset purchases, we lifted off in March of 2022. By early 2022, headline inflation exceeded 6% and core was above 5%. New supply shocks appeared. Russia's invasion of Ukraine led to a sharp increase in energy and commodity prices. The improvements in supply conditions and the rotation in demand from goods to services were taking much longer than expected, in part due to further COVID waves in the United States. And COVID continued to disrupt production globally, including through new and extended lockdowns in China. Higher rates of inflation were a global phenomenon, reflecting common experiences.
This right here would have
Rapid
been an
increases
account
in the demand
like
for goods,
a day
strained
to
supply
swing,
chains,
man.
tight
That-
labor markets.
I mean, that in
and
and of
sharp
itself
hikes
was its
in
own
commodity
swing.
prices. The global nature of inflation was unlike any period since the 1970s. Back then, high inflation became entrenched, an outcome we were utterly committed to avoiding. By mid-2022, the labor market was extremely tight, with employment increasing by 6.5 million jobs from the middle of 2021. This increase in labor demand was met in part by workers rejoining the labor force as health concerns began to fade, but labor supply remained constrained. And in the
So it's
summer
kind of
of
interesting
2022,
to
labor force participation remained well below pre-pandemic.
get sort of a recap
There were
of the
nearly
last
twice
4
as many
years.
job openings as unemployed persons from March 2022 through the end of the year, signaling a severe labor shortage. And inflation peaked at 7.1% in June 2022. At this podium 2 years ago, I discussed the possibility that addressing inflation could bring some pain in the form of higher unemployment and slower growth. Some argued that getting inflation under control would require a recession and a lengthy period of high unemployment. And I expressed our unconditional commitment to fully restoring price stability and to keeping at it until the job is done. The FOMC did not flinch from carrying out our responsibilities, and our actions forcefully demonstrated our commitment to restoring price stability. We raised our policy rate by 425 basis points in 2022 and another 100 basis points in 2023. And we've held our policy rate at its current restrictive level since July 2023. The summer of 2022 proved to be the peak of inflation. The 4.5 percentage point decline in inflation from its peak 2 years ago has occurred in a context of low unemployment, a welcome and historically unusual result. So, how did inflation fall without a sharp rise in unemployment above its estimated natural rate? Pandemic-related distortions to supply and demand, as well as severe shocks to energy and commodity markets, were important drivers of high inflation, and their reversal has been a key part of the story of its decline. The unwinding of these factors took much longer than expected, but ultimately played a large role in the subsequent disinflation. Our restrictive monetary policy contributed to a moderation in aggregate demand, which combined with improvements in aggregate supply to reduce inflationary pressures, while allowing growth to continue at a healthy pace. as labor demand also moderated, the historically high level of
May
vacancies
take another
relative to
trade.
unemployment has normalized primarily through a decline in
Well, I wish I
vacancies,
took that one.
without sizable and disruptive layoffs, bringing the labor market to a state where it is no longer a source of inflationary pressures. A word on the critical importance of inflation expectations. Standard economic models have long reflected the view that inflation will return to its objective when product and labor markets are balanced without the need for economic slack, so long as inflation expectations are anchored at our objective. That's what the model said. But the stability of longer-run inflation expectations since the 2000s had not been tested by a persistent burst of high inflation. It was far from assured that the inflation anchor would hold. Concerns over de-anchoring contributed to the view that disinflation would require slack in the economy and specifically in the labor market. An important takeaway from recent experience is that anchored inflation expectations, reinforced by vigorous central bank actions, can facilitate disinflation without the need for slack.
Enjoying the bit here.
This narrative attributes much of the increase in inflation to an extraordinary collision between overheated and temporarily distorted demand and constrained supply. While researchers differ in their approaches and to some extent in their conclusions, a consensus seems to be emerging, which I see as attributing most of the rise in inflation to this collision. All told, the healing from pandemic distortions, our efforts to moderate aggregate demand, and the anchoring of expectations have worked together to put inflation on what increasingly
took another like 270 or so off the market, 260.
Disinflation while preserving labor market strength is
I'm going to stop it there. It's up 1,300 on the day. I'm good.
Which reflect the public's confidence that the central bank will bring about 2% inflation over time. That confidence has been built over decades and reinforced by our actions. That is
your mileage may differ, he says.
That the pandemic economy has proved to be unlike any other, and that there remains much to be learned from this extraordinary period. Our statement on longer-run goals and monetary policy strategy emphasizes our commitment to reviewing our principles and making appropriate adjustments.
Sorry for switching for so many windows, guys. I'll get better at streaming, I promise. JPOW pretty much ended there saying that we learned from the past and we're going to need to reflect on that and learn and take that into the future. That's kind of how that ended. So let's see the markets after JPOW spoke. And here we are, big sell-off. That music back up. All right, big sell-off after JPOW exits the stage. And as he begins to exit. So JPOW just exited about right here. We got this big sell-off. Did get a good trade right here. Took about 6 ticks off on 3 contracts. And made about another 260 or so. So up about 1,300 on the day. And that's definitely where I'm going to cap it. So we'll call it there. I think there's going to be another op for another push, but that was it for the day. I mean, that was like the big moves. Grateful that I got to capitalize on some of this. Certainly wish I went for a little bit more, but like I said, I have a consistency target to make. So if I end up, having days that are like $3,000-$4,000, it's not actually going to help me. It's not going to make me necessarily pass my evaluation. With Top Step, it'll just make it so that I have to keep on trading in order to hit that consistency target, which means I'm going to need to have smaller days to sort of bring down that average. So I don't really want to go through all that. It's kind of a pain. And then also, so here's where we're at right now. Our biggest day was 469. Our day on the day today is 1297. So if we pull up the calc on that, so we got 469. I did that backwards. We got 1297 divided by 469, I guess. So it's like 2.7x. So it's like 270% uh, of what our best day is. Now, this is the best day percentage of the total profit. Um, and so the total profit on the account right now was 262. So that's why this 262. That's why this 469 outlays that. So just to do that math, 262.8 divided by 469. Actually, 469 divided by 262.8. Yeah, there's that 178%. Okay, so now it's gonna be um now it's gonna be so we'll have, let's see, 262.8 plus 1297. Okay, so it counts at 11 or 1559.80. Okay. And we'll take that. We'll divide that by the 1297. So currently that is gonna be about 120% for the best day percent to total profit. So I need to get that down to like 50%. So we'll have a couple of days that are like, $400 or $500, and then we should just land there. So I think we'll be okay. Yeah. All right, guys. I'm gonna go ahead and jump off here. I want to thank everybody for showing up. Again, please like, subscribe, ring the bell for notifications. I will get better at this stream. I promise. I will make this look better, feel better, be smoother, and all those things. Just the more that we can grow, the faster those changes, and the faster we get better at this. So, thank you, Tiny. I appreciate it. All right, y'all. We'll see you guys in the Discord community, and peace out for now.